ABC News reports that San Francisco home prices are falling faster than any other city in the country. But what does this mean for all home buyers and sellers here in not just San Francisco, but the entire Bay Area? Coming up on this Silicon Valley Snapshot. We are used to seeing the Bay Area break many housing market records, but not this type. Home prices in San Francisco are falling faster than any other city in the country. That is not an award you want to win. And we're going to get into how this affects San Francisco home buyers and sellers across the greater Bay Area. But before we get into the data, before we get into the numbers, if you are a home buyer in today's marketplace and you're looking for a comprehensive data report to assist you in your home buying decision making, you can text the word data plus the area or the neighborhood or the zip code that you're looking in, and we'll get a data report sent straight to your inbox. And if you're a home seller in today's marketplace and you're looking for a comprehensive data set to assist you in pricing your property, or maybe you're trying to decide, when should I sell my property? When can I expect to get the most amount of money for my home? Should I sell now? Should I sell later? Well, all of those questions will be answered when you text the word data plus your property address to the number down below. This article here, published by Tim Johns of ABC7 in the Bay Area, clearly demonstrates that there is a true cooling off of the Bay Area housing market. And honestly, this is not front page news. We've known for a while. And if you've been watching my videos here over the last several weeks, you'll see the data. The data is very clear. San Francisco is hurting right now. And a lot of the other cities around it are also not doing great. And so what does this mean for all of us here in the Bay? Before we go there, let's just read the article here real quick. According to One Housing Index, Tim Johns writes, housing prices in the city by the Bay dropped faster in August than in any other city in America, a 4.3% decline since July. A couple of months ago, it was academic. We heard that there were changes coming, but I'm sensing on the street that folks are feeling, okay, it's here, it's changed. That's according to realtor John Wong. Shout outs to you, John. There are numerous reasons behind the drop. According to economists, we've seen interest rates going up very quickly, faster than they've gone up since the 1980s. The Federal Reserve has been pushing up short-term rates and mortgage rates have responded as well, said economist Daniel Altman. Now, again, this is not front page news. What's happening though, and we're seeing it, is that San Francisco, which was already, if you've been watching these videos for many years, you've seen the data, you've seen the numbers, and San Francisco has not been doing well for a good period of time. And so to layer on increasing rates, etc., it's only going to exacerbate the situation. So we could have anticipated that this was going to be the case just based on the data trends in San Francisco over the last several years. The article goes on to say, on top of climbing interest rates and high inflation, the already astronomical prices of San Francisco real estate means costs have farther to fall. This is very true. And this is very important. Despite being off their peak, real estate prices are still hovering near all-time highs. Given the market that we had before, where there were 10, 15 offers for a property, that was sort of an unreal market. Now it's moving into a more reasonable discussion between buyer and seller type of market. Experts say prices locally, like the rest of the country, will continue to fall in the immediate future. Again, duh. But most don't think the downturn will resemble anything like the crash we saw back in 2008. We don't have such a large overhang of leverage this time, and I don't think that the crash, if there is one in housing, would be quite as bad as what we saw then, Altman said. Because, despite its flaws, San Francisco still remains a highly desirable place to live for many. If you mention the name San Francisco anywhere in the world and anywhere in this country, everybody knows of it. Here's what I want all of us to really think about. And if you watched last week's snapshot, which if you haven't watched it already, go ahead and click this right here. It'll take you to the video. Go ahead and watch that because it really illustrates the discrepancy between what we're experiencing now and what we experienced back in 2007, 8, and 9. The difference between inventory levels now versus what inventory was in 2007, 8, and 9 is a factor of 4. There are 4 times as many homes on the market back during the crash as there are right now. In fact, if you look historically over the last 10 years, we're actually sitting at lower than average inventory levels over the last 10 years. Still, right now, what's truly taking a hit is buyer demand. Buyers are pulling back. They are scared because of all of the uncertainty that's percolating in the environment, as well as the sticker shock, the shock value of having to pay literally 30% more to buy the same home every single month, because interest rates going up by 3% over the last 6 months equates to a 30% increase in payments. That is not an easy pill to swallow. But here's what we do know, is that historically, roughly the same amount of homes sell every single year, within a few thousand. It tends to go like this. There's fluctuations, but the reality is that in the Bay Area, even when times weren't that great, roughly the same amount of homes sell every single year. And so demand stays fairly consistent. Now, at the end of this year, when we look at the range of number of homes that sell every single year, I'm sure that we'll be probably on the low end of that. But here's what I do know, is that people are still getting married. People are still getting divorced. People are still having children. People are still passing away. And while pendings are temporarily down right now, all of those people that are going through those life events right now, that is slowly compiling and compiling and compiling. And it's going to continue to compile for probably 3 to 6, maybe even 12, 18 months. But at some point, sooner rather than later, all of that pent up demand is going to need to buy a house. And what we saw in 2020 after the COVID lull, and what we saw back at the beginning of 2018, that run up in pricing is going to happen again, because demand does not dissipate. It might be delayed, but that demand isn't going anywhere. And so if you're a home buyer right now and you're looking at what's happening in the market, this is the opportunity that a lot of us have been waiting for. I know I've heard it like over the last couple of years. Oh my gosh, I'm waiting for the market to go down. This is the market going down. This is what that looks like in real time. There are opportunities if you are looking for it. At some point in the future, with a fair degree of confidence, I can say that rates will come down. They might not go down to 3% like they were before, but they will come down fairly significantly from where they're at right now, locking in an amazing price at the moment and also locking in a great rate at some point later on down the future in the form of a refinance. Now, if you're a seller right now, the truth is that if you can hold on to your property for like another 3 years and like there's no life event that's causing you to urgently have to sell, now might not be the best time for you to do that. Like, let's be real. And that's exactly why the market is going to stay healthy right now, is because the life event that was happening to every individual really is they could no longer afford to stay in their house. And not only that, but they had no equity in 2007, 8, 9. But now folks have a ton of equity and they don't necessarily have the need to liquidate that asset. They don't have a need to get rid of it. And that will keep inventory levels from getting out of control. And we're seeing it right now, where inventory levels are not exceeding even where they were even a few years ago. And so we're still well within the means of acceptable inventory range for the amount of demand that we have in the market right now. Sure. Have prices come down? Absolutely. Are prices going to continue to go down? Yes. For how long? Who knows? But the truth is that as we go down, there will be an inflection point. And by the time we know that the market has already dipped and truly valued out, it's going to be too late. At that point, there's going to be multiple offers, buyers bidding $50,000, $100,000, $200,000 over asking price, because that's how Silicon Valley works. It's very herd mentality. It rains, it pours. So in this moment, if you're a home buyer, there are opportunities out there if you are looking for it. And that's where my team can help. We have over 25 agents around the Bay Area here to help negotiate for you the best possible price. We know how to hunt for those great opportunities. So if you're interested in learning more about how Selling Silicon Valley can help you, go ahead and text the words "get started" to the number down below. That's "get started" to the number down below. It's no secret what's going on right now in the housing market is definitely, it can feel scary. It could feel unnerving to kind of immerse yourself into the market right now. But if you just look at the data, what a lot of our clients have found, by just looking at the facts and looking at the data, all of a sudden, all of that uncertainty and all of that fear suddenly goes away, because the data doesn't lie. The media sometimes does, but the data never lies. This is Danny Gould, Selling Silicon Valley, and I will catch all of you in the next Silicon Valley Snapshot.